Welcome to Markets Now. I'm Michelle Rook along with Randy Martinson Ag. Livestock have rebounded after that lower opening this morning, but grains are still lower. And Randy, let's start off talking about soybeans first off, because we had a nice day yesterday. November closed above $14. But what are we seeing? Some profit taking today with a little better than expected crop ratings?
I think so. I mean, the ratings did come in a lot better than anticipated by the majority of the trade. They were looking for 2 to 3% declines. It only dropped by one. Again, the central and eastern Corn Belt continue to see good conditions, whereas the west is where the trouble is in the northern plains. So I do think that this next week we're going to continue to see deterioration in the crop. I think that's keeping this market from dropping too much. But for right now, I do think that it's just a little disappointment in where the crop ratings came out yesterday.
Yeah. Okay. We're not very far from contract highs, though. If this weather confirms this forecast and we stay dry for the next couple of weeks, is it possible we could go and take out the contract high areas? We're not that far from them.
We're not. And, if we continue to see, some export demand trickling in as well, like we did overnight, we saw another export sale. That's two this week. So, yeah, I do think we could take out the contract highs. And that's certainly, if we look at everybody's been worried about the bean production, and that's always one where the stocks got tightened in the last report. If we take another 1-2 bushels off of the potential yield for soybeans, that really is going to make that tighten up that scenario for ending stocks dramatically.
Yeah, that's going to put some pressure on USDA in the September WASDE, isn't it?
It is. Now, this, I believe, will be USDA's first look. They're going to go out and do infield surveys on this one. So it'll be interesting to see what they come with compared to what the Pro Farmer Tour came with.
Corn has been following soybeans here, but could not make it above the $5 mark. So in your mind, is the corn market just comfortable right now with where yield is at, or what?
That, and then they're looking also at the crop condition ratings, and it didn't change much either. It was down 2%. Right. They were expecting it to be a little bit more. And part of it is they think the corn crop is a little bit further along in maturity. A few more areas have reached maturity, so that this heat isn't going to impact the potential of the corn crop as much. I do think that, again, the western regions is going to continue to see some stress from this, and we are going to see lower potential. It might, and a lot of it will probably come in test weight because we're going to be looking at smaller kernels. But for the most part, I think we still have a chance to see a 3% trim on the corn crop. So I think it's following to a degree, mainly because it needs to stay close to soybeans, but also because there's a small concern about lower production.
Yeah. And corn, like you say, has been following soybeans, are getting some spillover strength. The corn market, though, the difference between corn and beans is that we'd have to lose a lot of bushels here to get us below 2 billion bushels on our ending stocks number, right?
We would. And that's going to be tough. I mean, that really is kind of the black cloud of hanging above the corn market, is the fact that we've got huge stocks, and its likelihood of losing 2 bushels or more is pretty unlikely at this point across the national average. So we still are going to have a pretty daunting ending stocks estimate as far as corn is concerned. And demand has been improving, but it hasn't been picked up much. The other bad part about corn is that it's also tied to the wheat market, and the wheat market is certainly not handling this any news very well.
Yeah, I was going to just say that the wheat market obviously is the other black cloud that's been pulling down the corn market. Wheat into some contract lows again here this morning. How much more are the specs going to push this market down?
Boy, I mean, that's a good question. I mean, you almost feel like throwing in the towel on wheat because of how bad it's been getting beat up. We're looking at harvest. We're seeing better than expected yields up here in the northern plains. Harvest is moving along with this forecast. We should be able to make some pretty good progress here as we go into the Labor Day weekend. And I think that's adding to a little bit of pressure to the market. It's hard to think that we can see this thing push too much more. I mean, the lower we take the price, we're still not seeing demand. So it doesn't seem to matter what our price is. We just can't seem to get demand going in wheat.
Yeah, we don't have any war weather premium, but the bigger problem really seems to continue to be the lack of demand and how low we need to go to stimulate that. It was also disappointing this morning to see Minneapolis wheat not be able to hang on despite Stats Canada coming in with lower production than expected, right?
Oh, most definitely. And that was kind of what we were hoping that we could, hang our hat on, is that that could help support the Minneapolis. And of course, Minneapolis isn't down as bad as the winter wheat contracts are, but it's still lower. It's still at new contract high or new contract lows. So it's not a very impressive performance in wheat anyway, all the way around.
So I'm going to ask you that question that I just kind of talked about. How low do we have to go in that market to start stimulating some export demand?
That's a good question. And at this point, that's hard to tell because, every time we drop, of course, everybody else drops their price as far as the world is concerned to stay competitive or to keep exports. So I would say at this point, it looks like until, probably another 25 cents, get close down into that low seven area as far as Minneapolis is concerned, it might start to spring in some demand. But at this point, it's just really a hard question to answer because we already are below where we should be at with wheat compared to the other markets, but we just can't seem to get any demand to come into play.
Yeah, that's because Russia's selling their cheap wheat to everybody. So, okay, cattle market. We have recovered after some early profit taking here this morning. New contract highs yesterday in the feeder, September on back. And so, is this live cattle market going to also at some point hit contract highs? And how much of this is tied to maybe putting in some weather premium?
I think the live cattle will get to contract highs. I kind of expected that we'd see cattle make one more push to new highs here, especially the end of August or beginning of September. Seasonally, I think, right now supplies haven't been coming in like they normally would. I think there is some cow calf guys that are going to background calves a little longer because there is feed available. So I do think that some calves will be held off the market for a while. But I think once they start coming, we'll see this market turn and we'll see some seasonal pressure again. But right now, I do look for the market to go back up, test some highs. I would expect that cash will follow along at this point as far as the fat cattle market is concerned.
And I asked it and you never answered, but is this a little weather premium or are we just back trading these tight supplies here?
I think the weather premium is adding some because now we're talking about, of course, cattle movement is slowing down, but also performance is slowing down, and that is adding to the lesser supply that's coming into play. We saw that in cold storage numbers. So I do think that the weather is playing a big part of this big push is about.
Yeah. And boxes were down here yesterday and then at noon here today, but you're still at above 315 on the choice, which is pretty unusual and pretty impressive for this time of year, isn't it?
Oh yeah, we're holding in there pretty good as far as the boxes are concerned. Demand has been holding decent. I still think we've got some issues with the economy going forward that we'll see what the Federal Reserve does with their next few meetings. But for the most part, we really haven't seen much of a recession hit the U.S. and we continue to see very, very strong demand, and a lot of it is based out of the restaurants.
Yeah. So hogs have corrected seasonally off of their highs, but where do you see us going now?
I still look for some push in that hog market. I think, the fact that where August went off the board and we're still at a steep discount to those levels, and I think we should be able to see some push back into this market. Trouble is that because of what we're hearing coming out of China with their poor economy and likely that their demand isn't going to pick up, that our exports won't see very good strength. I think that's kind of keeping the hog market a little bit depressed.
Okay. Thanks for joining us. Randy Martinson, Martinson Ag. That is Markets Now.